this is a topic that I am incredibly passionate about, and I love talking about the Form 990. Maybe not so much the IRS, but just complex tax issues and addressing risk for nonprofit organizations. So I'm really pleased to have been invited to come and speak to you guys today. A big shout out to Vince and Cherokee and all of the other folks who have helped out to put this conference on. I know it has not been an easy task for them. And I will tell you, as a speaker, they have just rolled out the red carpet and been so communicative. So big round of applause for them and everybody involved with organizing the event. I think given COVID and everything, it's been a challenge for a lot of organizations. So just really glad that we were able to keep rolling on this and to get it going. Okay. So my name is Stephanie Bailey. And I am currently, just a really quick intro, I'm currently the Vice President of Finance at Goodwill Industries of Central Oklahoma. I've been with Goodwill for about a year and a half. And in that role, just for some background, I oversee our accounting and finance department, managing all of the day-to-day functions of the finances, including things like cash flow, budgeting, financial reporting. We have federal grants, so I handle all of the reporting for that. And compliance with those, among some other things. I think, most folks are familiar with Goodwill, and I think when people think of our brand, they think mostly of our retail thrift stores. But we also, just most people don't know this, have a department of about 100 people dedicated to janitorial services and unarmed security services. So we just have this very robust contract services department that I also lead on the operations side. And kind of hilarious, given my technical difficulties, I somehow also oversee Goodwill's IT department as well. Luckily, I have a lot of help on that because that's certainly not my area of expertise. So, have really enjoyed working with Goodwill. It's a great organization, and just kind of in terms of nonprofit and identifying risks, we've got a lot of arms and a lot going on organizationally and in the community. And so it's given me definitely a really fresh new perspective on things to look out for when you're thinking about risk associated with nonprofits and what all the different compliance issues and filing requirements are. I met my husband prior to coming to Goodwill, and when I worked at KPMG, we both worked there together. And so we actually created Bailey & Bailey CPAs as well. And so that's something that we do on the side, whether it's speaking engagements like this or bookkeeping, tax services. I do Form 990s and 990 PF returns as well on the side. So just something that we do, kind of trying to bring our experience forward in a different capacity other than our day jobs as well. Prior to Goodwill, I spent my career in public accounting, most recently serving as the director and head of KPMG's Southwest nonprofit tax practice. In that role, I worked with over 100 nonprofits across 6 states, providing tax compliance and consulting services to those. My clients really, that base just covered the gamut in terms of the nonprofit sector, including large multi-entity health systems, colleges and universities, large public charities and private foundations, and just a variety of other organizations who maintain tax-exempt status for one reason or another. So in my prior life, I got to see a really broad array of different types of nonprofits and worked with them in a number of capacities. And then my current role at Goodwill, really focusing more into this kind of essence of a nonprofit as a social enterprise and really running a business, and what does that look like? I threw a few things on the slide, just community involvement, as I'm sure a ton of folks on this session are as well. Just, we all know how important community engagement is, whether it's serving on a nonprofit board, participating in conferences like this one, whatever it is. And so that's something I've always been really passionate about and love to do, as much as I can for that piece. Really quickly, just on a personal level, I'm an Oklahoma native. I graduated from the University of Oklahoma, where I was a track athlete, and I did the heptathlon and pentathlon events. That seems like a million years ago, and several pounds later. I think my new favorite personal fact is that I recently became a new mom to a gorgeous little girl. And today she actually turned a month old. So if I fall asleep during this presentation or seem absent-minded, give me some grace, because my husband and I are operating off of very, very little sleep right now with a 1-month-old. So that's just a little bit about me for context, and hopefully, oh, thank you for the congratulations in the chat. Yeah, it's parenthood is a new adventure for sure. So that just hopefully helps with some context. The topic today is incredibly niche, I guess, with the Form 990 and tax compliance issues. But if there are other questions that don't necessarily specifically relate to this, I'm happy to answer that either at the end of the presentation, during, or I've included my contact information as well. This is just a quick disclaimer that says anything I can say cannot be held against me as legal or tax advice. This really is just intended to be informational. And normally when I speak on this particular topic, and as well as others, I always try to make it very interactive, which is hard with this setup, but really just intended to provide some practical assistance and advice, and just some help with how to kind of navigate some of the risks with some of this reporting. All right. So I think, a lot of times when people think taxes or Form 990 or kind of nonprofit risk or whatever that looks like, it tends to be a really boring topic. So I will do my best to make it very interesting and upbeat. But again, like, really the goal is to give you guys some practical tools that you can take away and take to your respective organizations. And I think too, in my personal day-to-day with, Goodwill, being a CFO, I've realized that for so many of my old clients, the 990 was just another box that everybody had to check, right? So while it was really important to me because that was my specialty, it was really challenging to get clients to understand how robust of a tool the Form 990 can be, and why it's important for a variety of other reasons when you're trying to mitigate risk. So why does it matter? We're going to go through 4 key considerations for the Form 990 and compliance with that reporting and why it matters. In short, the form really demonstrates that an organization is fulfilling its tax-exempt purpose. That's really what the goal is, and ensuring that its financial resources are being used in furtherance of its exempt purpose. And whatever that charitable mission is, we want to make sure that the public, the IRS, and other key stakeholders feel that the funds are being used for their intended purpose, and that because it's public money, that money is going to the right place. It's also meant to encourage accountability and transparency around activities, governance, and certain relationships. Again, I think this tends to be kind of another checkbox for a lot of folks, but we're trying to move the perception into really proactively using this as it's a value add tool for organizations. So the first thing we'll talk about is corporate compliance requirements here. So again, in terms of like, why does this matter? The Form 990 is the IRS's tool for monitoring compliance for nonprofit organizations as they relate to the federal tax laws. For most organizations, it has to be filed annually, and a lot of people think that the Form 990 is a tax return. It really is more of an information return. For those of you who are pretty involved in filing those, you can know that there's a ton of information that goes into getting those handled. So just a few things. Again, the biggest thing here, obviously you have to kind of prepare a tax return and file it timely and all of that. But what we're really trying to focus on with this presentation is mitigating risk for the organization. So where is your risk when you're thinking about that from a compliance perspective? Timely filing is really important. So there's an extension period, and then when your final return is due. For calendar year filers, that's going to be a May 15th deadline, followed by a November 15th final deadline. So you have to file your extension by May. we're already pretty well into the year, but just for those of you who don't know, due to the COVID pandemic, the IRS did come in and extend those deadlines as well. So the extension deadline was in July. So just to kind of give people a little bit more time to get all their ducks in a row. Really filing a complete return, I think that seems like a very obvious statement, but what a lot of folks don't know is they come across a question and they think like, oh, I don't really know how that applies to me, or that doesn't apply, so we're not going to check it, or we're going to mark this yes, and even though it requires a disclosure, we're not going to put all of the required information. That is something that's really important to look at. The 990 has a ton of yes, no questions, but then it has a lot that really does require some follow-up on what we call Schedule O, which is a section where you can further disclose more robust answers other than your yes or no. Because the 990 requires so much follow-up on Schedule O, this becomes really important. If all of the questions aren't answered, or if they're answered in a way that creates this kind of red flag concept for the IRS, where it's like, hey, do you have a whistleblower policy? And you say no, like that's a red flag, right? So you'd want to further go to Schedule O. If the answer to this is no, then why do you not have that policy? Tell the IRS why you're not in compliance with that and why you don't feel that that's important. If the return is filed and it is not a complete return, then the IRS can come back and say that you did not file timely, and the penalties can be pretty steep on that. And 3 years of non-filing, they can automatically revoke your exempt status. So that is something to kind of keep in mind. I don't think the IRS comes in a lot and says, hey, you didn't answer these questions thoroughly enough, so we're gonna, ding you for that. But again, just it being a tax document, you want to make it as complete as possible. The internal review process becomes very important. I think oftentimes the 990 falls on the controller or the CFO in the organization, and really at the end of the day, it's pretty difficult for the CFO to be the only person who is able to answer those questions. So a lot of the questions require CEO input. It's going to require input from your HR department. It's going to require input from your program folks, especially with updates to programs, whatever that looks like. Are the descriptions still accurate? How many persons are you serving or placing, things like that. And so making sure that you've got a really good internal review process to make sure that all the information reported is accurate. The other thing is really making sure that your board is involved. So that then there's a question on the 990 that asks if your board received a copy, did they review it? It's really important to be able to mark that yes, and to have your board invested and engaged in this process, not just for the storytelling aspect, but really just for the due diligence. They are ultimately the keepers of this fiduciary responsibility, right, with respect to the organization. And it's really important that they're involved in reviewing the information, both financial and non-financial, for the form. And then, of course, the return requires an officer signature. Sometimes people get in a bind and they just have whoever's standing there sign off on the return. You want to really make sure that it's an authorized officer of the organization. In terms of filing a complete return, these are just some of the sections. So contribution revenue, certain donations over a threshold are going to ultimately be reported on Schedule B, lobbying expenses, Schedule C. In the Form 980 instructions, there's a page that says, hey, if you have this, then you should probably have this schedule as well. And so when we're thinking about this concept of filing a complete return, you really want to make sure and just do a quick check on that every year, because if there's something new that you're doing, like, oh yeah, we issued a loan to an officer, then you're going to need probably a Schedule L to go along with that. And so what does that look like? Oftentimes, anytime anything new happens with the organization, you really want to take a look at what schedules you're filing in addition to the core form and make sure that you've got all your bases covered for that. And then in terms of compliance, this, working with really big health systems and colleges and universities and things like that, that is where I have seen this the most. Also, large foundations, whether it's a public charity or a private foundation. And anytime you've got K1 investments, alternative investments, real estate, things like that, you really want to take a fresh look and make sure you've got a specialist looking at your filing requirements and making sure you don't have any of these other items to report on. Form 990T is for unrelated business income. K1s oftentimes kick off some of that in addition to other activities the organization may be directly engaged in. State tax returns, if you're in real estate, there's a good chance you've got state filings as well. Again, if you have K1s, those often create reporting requirements at the state level. Foreign reporting and FBAR as well. So just some things to look out for. The penalties for some of the foreign filings and even the states when they ding you for non-filing compliance, the penalties can just be so steep. So it's really worth it to pay a little bit extra, I think, on the front end for, a CPA to really take a look at the requirements ahead of time before filing to make sure that you're attaching anything extra that you need to. And just for context, some of the late fees or non-filing fees associated with foreign reporting forms is, they start at $10,000. And that's per form. So if you have a Schedule K1 that reports, triggers 7 different filing requirements for 5471s or 926s or FBARs, that can add up pretty quickly if you miss those. The IRS gave a grace period a few years back when this type of reporting started becoming more prevalent, and they realized that nonprofits had been left out of the conversation. Nonprofits may have a ton of investments and may get 100 K1s and had never reported any of these additional filings. And so they provided a grace period, and I think they've kind of wrapped that up and said, okay, we think that we've educated enough and gotten the word out there that folks should really be providing the reporting as they need to. The other thing on here really is just contemporaneous documentation. That's kind of a one-off, but one of the biggest things is that when you have an IRS auditor come in, and again, it may just be a random selection, or maybe you answered no to one of those red flag trigger questions, right? I had a client who they did a raffle at an event, at a fundraising event for the first time. And so they reported gambling on their 990 for the first time, and that triggered an IRS audit. So there was nothing wrong with their return. They didn't do anything incorrectly, but it triggered an audit. And so while they were there, they looked at a number of other things as well. And so this concept of contemporaneous documentation is really important, because you don't know when an auditor is going to come in, and you don't know when they come what they're going to look at. And so making sure that when you are making decisions, we are not reporting this event as a fundraising event because we don't feel like it meets the requirements as defined for a fundraising event. Make sure that you've got, even if it's a 3-sentence memo to the file that says, we made this decision and this is how we substantiated that. This is how we got to that conclusion. It makes your life a lot easier when that auditor comes in, because again, there's a time lag. So they may come 2 years down the line and you're not going to remember why you made the decision about that one event that the organization doesn't even do anymore. So I, as a tax accountant, I have always been an over documenter, and I think that has helped me in a lot of ways, and I think it helps clients a lot as well. So when you're making these decisions, I think it's really important that if you're marking a box a different way on a 990 than you have in the past, it's really good to leave some sort of paper trail as to why that changed. Okay, another key consideration here is key stakeholders. One thing to really keep in mind is that the Form 990 is open for public disclosure. So they're all posted on GuideStar. There is a time lag for them going up. It's not like as soon as you submit to the IRS, they're up there. But anytime I'm approached to join a nonprofit board or to meet somebody out who works at another nonprofit or whatever it is, the first thing I do is I go pull their 990, because there's just such a wealth of information on there. And it takes 5 seconds to pull it up. So really, when you're reporting on your Form 990, really keeping in mind that anybody can go look at it at any and really thinking about who are the people who are invested in looking at this. And so I listed just a few, like obviously the general public, that would be like someone like me, like, oh, I want to donate to this organization, but I want to learn more about them first. How are they fiscally? Are they, financially sound? Are they, how many people are they serving every year? How many volunteers do they have? Things like that. You can find all of it on the 990. State charity regulators, so you have to file annually with the Secretary of State, so that's something they're going to be looking at the Form 990. Your donors should be looking at this. The media, I think especially now with social media, it is really, really easy for somebody to pull up a Form 990, see that your CEO makes, $500,000 and there's their news story for the weekend kind of thing. So really thinking about who is looking at these returns and trying to play a little bit of devil's advocate and what would these people be looking for, and is there anything that could be misconstrued or that might be perceived as not being what it really is in its true nature. So all things to think about, and just remembering that there are a lot of eyes on the Form 990, even if it kind of feels like a checkbox kind of filing. Okay, transparency. So in addition to a ton of documentation, I think the 990 really came about and its robust reporting requirements because there was a desperate need for more transparency. There was this feeling that nonprofits could do whatever they want, and because they're governed by a board of directors, the rules kind of felt a little loosey-goosey on some of that, and just there was this sense from Congress that there wasn't enough transparency being provided by the nonprofits to ensure that they weren't diverting funds or kind of using some loopholes with respect to their nonprofit status. Kind of think, running a for-profit business and kind of covering it up as a nonprofit, I think was happening a lot. And then some other issues that we'll talk about a little bit more later with just kind of transactions with insiders. So where you've got related organizations, whether it's a nonprofit funneling money to a for-profit or vice versa, and just really needing to get a better eye on some of those transactions, and what does good governance look like for a nonprofit organization? What does your board look like? What are your processes? Do you have a conflict of interest policy, and how often is that updated? And what's the process if there is a conflict, and things like that. So really, they really beefed up the form in 2008 to try to create this additional sense of transparency. And it's been a really heavy lift for nonprofit organizations, just because for those of you who work for nonprofits, resources are scarce and we all wear a lot of hats, and you're just trying to do the best you can. So the last thing you want to hear is that you have more and more reporting to handle. I think also, I always err on the caution of just over disclosing. If you have something that looks weird or is unique to a certain year or whatever it is, I think it's really helpful to the reader of the Form 990 if you add a disclosure, and it doesn't hurt anything, and all it can do is help the organization. Again, kind of back to that, if I report this in a certain way, how is that going to be perceived by the general public or the media or whoever it is? And is that what I want to be out there for my organization and its mission? And then the other key consideration, and really just a huge, I think, missed opportunity for a lot of organizations, is going to be really sharing your story through the 990. So a lot of people think like throw the numbers on there and move on, but the Form 990 is such a robust information return that you can add information about your programs and how many people you're serving, how many people you're placing. And if you are this organization who really, you've got a CARF accreditation and you are all about good governance and having robust policies and procedures in place, it's just a great place to tell that story and to say, hey, we're a nonprofit, we've got it together. Here are our processes, here are our policies, here are our procedures. This is what we're doing. And by the way, here's our great, financial stability that we have. And then these are the awesome programs we're running as well. So there's just a ton of opportunity to be able to share things like community partnerships and mission moments. And again, just illustrating that you guys have like good financial due diligence and things like that. And, I always say if you have a really good Rockstar 990, make sure it's on your website, because again, the easier and more readily available that information is to your donors and other people interested in the organization's story, the better. Okay, and we've touched on a little bit of this, but again, in addition to kind of compliance and why the form matters, I always want to touch on kind of some of these really big key risk areas. Because these are the things, what's keeping you up at night. So as the CFO, I think, gosh, I'm really worried about our, our board governance, or I'm really worried about our compliance with our federal grants, or I'm really worried that we've got some revenue streams that might be unrelated business income that we haven't looked into. Those are all things that I think are really, really common just worries and concerns for organizations, the things that you just don't feel like you've totally got your arms wrapped around. So for governance, things that the IRS is going to look for really is making sure that you've got independent board members. And if not all of your board members, at least the majority of them should be independent. There will be cases where there's some sort of relationship. Maybe it's a relative works for the organization, relative of a board member, or you've got relatives on the same board and things like that. And so those aren't necessarily no-goes. I mean, you can certainly engage in some of those relationships, but there are disclosure requirements. And I think anytime there's a lack of independence for one reason or another, you're going to want to be transparent about that on the 990 with the disclosure. Making sure that you have separate committees. And again, this concept of contemporaneous documentation, for most organizations, Goodwill, and then some boards that I've served on as well, most of the heavy lifting in terms of board engagement happens at the committee level. And so when the decisions and the discussions are happening at that committee level, really making sure that you've got good minutes that discuss what the issues were that arose and what the decision-making process was. Anytime there's an approval on an issue to get to a conclusion, making sure that that's documented. Really just making sure that you've also got this balance where you've got your finance committee and your audit committee and you've got your program committee and all of these checks and balances in place to make sure that the organization is taken care of in the different areas that it has. Compensation for CEO and officers, again, really making sure a lot of organizations will have an HR and compensation committee, and that's the committee that is in charge of really doing the due diligence for CEO compensation. And we'll talk a little bit more about that in a minute. Written policies and monitoring, again, this concept of, conflict of interest policies, whistleblowers, document retention, making sure that you've got those in place in writing, and that there's a process if somebody comes with a complaint or a conflict that there really is a clear documented process of how that's supposed to be worked out. And governing documents, I know on most of the boards I've served on, it feels like we revise bylaws every other year. So really making sure that as you're making significant changes to bylaws or articles or whatever it is, or to even the nonprofit's mission statement, primary activities, whatever it is, that there's an item on the 990 where you have to disclose some of those. So I think it's really easy to say, oh, the board approved that, and then everybody forgets about it. But it's really important to put the IRS on notice for some of those changes. And here I've just highlighted really some of the key questions in the governance section of the Form 990. Kind of talked about all of those already, but just to keep in mind that these are some of the things that I think get missed a lot, where we sort of tend to roll the response from last year, and really just some some items to keep in mind. I would also highly recommend looking at the instructions for these highlighted questions, because oftentimes they ask questions that you wouldn't really think that they're asking, or additional information for disclosures and things like that. And then here's just a continuation of that as well. I know for non-tax people, you kind of go through these parts of the forms and you're like, oh my God, this is so boring. Okay, so compensation is a big hot topic, especially for the media. I know at Goodwill, everybody says, oh, Goodwill, we don't need to give them money because their CEO makes $2 million. Well, that may be the case at Goodwill Industries International for the person who's, leading 150 different Goodwill organizations. But it just is such a sensitive topic for a lot of folks in the nonprofit sector when you're thinking about compensation. Big payouts, other benefits, whether it's a 457B plan, 457F plan, what are you doing with your 401k match? Like, what does that look like? And there are a lot of questions around severance payments, unqualified retirement plans, any bonus or other comp payments. And so my advice when it comes to compensation reporting is over disclose. Really tell people what you're trying to accomplish. It's okay to have a bonus structure, but you probably need to tell people why you have it and how it's structured and what that looks like and who's entitled to those payouts as well. I think that there's nothing wrong with competitive compensation, but oftentimes the way the 990 requires comp information to be reported, it oftentimes looks a little bit squirrely. Particularly this column F for other compensation, really just keeping in mind that that encompasses a lot of different things, and you want to make sure that kind of looking at the detailed instructions to make sure you have that. If you have health insurance and you have other bonus payouts and things like that, 401k plan, whatever it is, you really should have something in the other comp column. I have seen so many Form 990s where organizations only report everything in the base compensation column, and that is really low-hanging fruit for the IRS to come in and look at. Particularly if you underreport compensation, that can be a really big private enrollment issue, private benefit, because we're required to pay reasonable compensation, right? This concept of what's reasonable. And the IRS can't determine that something is reasonable if it's not actually reported accurately on the form. So I've seen cases with an audit where an audit comes in and they say, oh, we didn't have anything here. And they end up pulling up all of, the entire compensation policy and a number of other things. And so if there's anything you get right on the Form 990, it's the governance section with the questions and then your compensation. Those are probably the two biggest pieces. And this is just, again, a snippet from the form. Just, it's easy to do same as last year, but really making sure you're reading through these different options to ensure that if there's anything new during the year that you've captured that as well. And this is just another example as well. And let's get that. Okay, I touched on this a little bit earlier, just transactions with interested persons. So this is going to be if if your CEO grants a loan to the organization or vice versa, you really want to stay away from transactions like that. But if you do have them, make sure you're going to the instructions, because there's some pretty robust reporting that has to be reported for Schedule L as well. Okay, and then business transactions. So this happens all the time where, hey, we used to have this board member and he was the treasurer and he rolled off the board, but the very next year he started providing consulting services for the organization and we pay him, $30,000 a year to provide that, that assistance. There's nothing wrong with that, but you have to disclose it. So again, just anytime you're paying somebody who has had any sort of, relationship with the organization, you really want to pull the hood up and really kind of take a look at those and what the requirements are. Again, it's not taboo. It's not something that you necessarily can't do, but it's just something you want to really take a look grant reporting and compliance, for those of you who have federal grants, I don't have to tell you this. I mean, you know that the reporting is incredibly robust and tedious, and there's just a lot that goes into it. But just making sure also from, from an IRS perspective that you've got really, really good due diligence around your grant policies and procedures, especially if you are going overseas with your money. I think there has been just a ton of scrutiny over the last few years when it comes to grants to foreign organizations, and making sure that you can really follow the path of the money and making sure that those funds are being used as needed. Okay. And then unrelated business income, really quickly, just because we're running a little bit out of time, is to really keep in mind that you really make sure that you're looking at all of your different revenue streams. So the threshold for unrelated business income is like a $500 tax liability. It's really, really low. So anytime you start a new activity, definitely go through to see, is this going to be excluded from unrelated business income, things like passive income, so interest, dividends, capital gain, whatever that is. Rents on real property, or if you're engaging in a new opportunity where, let's say, you're not using volunteer labor, or it doesn't meet the convenience exception, or whatever it is. Just really looking at each individual revenue stream and getting a good feel for what's unrelated business income and what's not. Because again, if you're not filing a Form 990-T when you should be, then that's something that really kind of comes up to bite people, having to go back and report that. And you could do that through a revenue analysis workpaper, which is really just kind of walking through the steps and the check boxes. We already talked about this, just alternative investments, flow through UBI, and really looking at those alternative investments and seeing if you have additional reporting requirements as well. And this is just from the revenue section for the Form 990. And I think we are technically at our Q&A session. Cherokee, I think that's right. Okay. Okay, so we don't have very many questions right now, so I'm going to address the one that's in there, and then I'll probably just kind of keep going with the presentation. And then we can just, if as questions come up, please feel free to ask them in the Q&A section or in the chat section as well. So the question is, are each satellite group required to complete the Form 990? That is, it depends. And with tax law, I think so often that occurs, really just that's almost always the answer, is it depends. There are really specific rules around group returns and affiliate rules for organizations that have a variety of different affiliates. Okay, so I can use Goodwill as an example, right? So Goodwill Industries of Central Oklahoma is, for legal purposes, its own standalone nonprofit. So while there's a Goodwill of Central Oklahoma, there's also a Goodwill of Tulsa, there's also a Goodwill of Spokane, Washington. There are over 150 different Goodwills. And so it really just depends on what the structure is and what that looks like. So for us, we're all separate legal entities. We have our own independent governing boards. And so each Goodwill files its own Form 990. So take an organization like the American Heart Association, for example, where you've got an American Heart Association branch in almost every city, right? So we've got one here in Oklahoma City, but they're headquartered in Dallas. So because of their affiliate relationship, all of those actually roll up into the one single entity, because those different locations are classified as branches. They are not separate legal entities. So you really have to go look through to the overall actual legal structure, which will tell you what you need to do for tax purposes and filing. Okay, and then should nonprofits file a 990 regardless of size? Okay, so the IRS really cuts nonprofits a break here, which is really nice. So there are 3 different designations for public charity type nonprofit returns, right? So and I don't have the thresholds in front of me, but for really small nonprofits, I think if you have revenue maybe less than $10,000, it's around there. It may even be more than that. Maybe it's 10 grand. You can file what's called an e-postcard. And so it's really easy. You go online, you put in your legal business name, your EIN, your total revenue for the year, and I think like your address. And then you can click that. So there's a certain threshold for that piece. And that's really the way to go for really small nonprofits, again, because they're not going to have the resources available to file a huge Form 990 return. There's also a Form 990 Easy. I think the threshold for that revenue-wise is $250,000. And then there's also an assets requirement, which I think is $500,000 in assets. Again, if you Google Form 990 instructions or Form 990 IRS, you can click there and it'll tell you exactly what they are. But the 990 Easy is a very, very pared down version of the Form 990, and it asks a fraction of the questions, and there's really limited financial disclosure as well. So if you're kind of a smaller nonprofit, again, thinking less than 250 grand in revenue, $500,000 in assets, then you can file a Form 990 Easy instead. It's the Form 990 Easy. So 990-Easy. And then if you're above those thresholds, then you would file the full Form 990. So it's e-postcard, which is also the Form 990-in. And then the Form 990 Easy is the next level, and then the full Form 990. Okay. Okay, so there's another question. Our organization has our taxes handled through CCO annually. When or for what reasons should we start filing our own? That, again, is really dependent on the structure of, again, legally how the organizations are structured, and I don't have the detail on that, but I've included my email in the slide deck. So if you want to shoot me an email with a little bit more information, then I'm happy to address that kind of separately. Okay. So that's all of the questions that I see. Okay, there was another question from Crystal. We have our organization audited each year. If we pay for an audit, is there a chance that we will be audited by the IRS as well? Yes. So the IRS, that audit process is totally different. So paying for a financial statement audit through an independent CPA firm is always a best practice, even if you're small. Maybe not too small, but that is going to be really something where you've got a stamp of approval from an accounting firm that says, hey, we've come in and we've audited your financial statements, and we feel that we are going to issue a clean opinion because everything is reported reasonably, and there were no material issues noted. So that's one thing. The IRS audit, that's going to be triggered separately and is more specific to taxes than it is to financial statement reporting. So they want to come in and make sure, like, one, have you met all of your filing requirements? So again, the compliance piece that we talked about, did you file timely returns? Were they complete? Are there missing schedules? Things like that. Then they could go a step further and say, okay, you did file a complete return, but we noticed these three things, and we wanted to issue additional inquiries around those issues. So what does that look like? And again, so if you get a letter from an IRS agent that's, requiring you to be under audit, I would highly recommend reaching out to a certified public accountant and having them assist, because what happens is they come in and they ask three questions, and you may have a great answer to those three questions. But what happens in an audit situation by the IRS is they can open it up to really whatever they want. And they can open up several years as well. And so they may come in and look at one thing that you're doing completely correctly, and that's fine. But in the process, when they're looking at that, they may see something else that catches their eye. And so really just making sure that you're grabbing the resources that you need to when you're looking at that. Okay, thanks, Vince, for that help on that one. Okay. All right, so that's all. Okay, is there a minimum? Okay, so the question is there a minimum revenue to file? For instance, if revenue just covers operating costs, there's a small amount in the account. So you have to go look at the specific thresholds. I can't remember off the top of my head if there was a minimum, but I think if you have revenue, you at least have to do the postcard. And it doesn't matter if your expenses net with your revenue to be zero. You have to look at the total revenue, like gross revenue, as sort of your indicator as to whether or not you have a filing requirement and what that filing requirement is going to be. But just because your revenue and expenses are the same and your net income is zero, it doesn't get you out of the filing requirement. So if you have, $15,000 worth of revenue and $15,000 worth of expenses, you probably still have to file the Form 990 in e-postcard. Okay, and I'll keep an eye on the questions to see if some additional ones come in, but we've got about 5 minutes. I'll just kind of yeah, we've got the Q&A, Cherokee, so we've got those. Keep in mind with tax reform that came into effect at the end of 2017 to really keep an eye on those provisions. For small nonprofits, there wasn't a ton of effect. Again, the UBI rules are different, so that's something I would look at. But for the most part, it really affects larger organizations. But definitely keeping in mind that anytime there's a significant change in the tax law like that, you want to really check that out. And it just makes the reporting a lot more complex and creates more pitfalls. So I know that there was a lot of talk about the Tax Cuts and Job Act of 2017 minimizing reporting, but it certainly did not do that for most organizations. And I'll just kind of skip through these. Really quickly, just some other areas of focus when you're looking at risk. If you have inventory sales, or if you're doing, even if it's like a small book sale or a garage sale or something like that, you definitely want to look at that in terms of, do you have sales tax exposure or potential unrelated business income? Oftentimes there's a lot of small nonprofits that are like, oh, we just did that thing, we do it 5 times a year and it's not a big deal and it doesn't generate very much revenue. You may have sales tax requirements through the state or unrelated business income as well. Independent contractors, especially those abroad, are just a huge hot topic and something that the IRS is always looking at. Also, just in terms of employee classification versus independent contractor, that has nothing to do with the Form 990, but some of the reporting on the 990 may trigger some questions about that. And so it's something to continuously look at, because I can tell that the IRS is really focusing in on that worker classification. And then also just this concept of mission drift. A lot of times organizations are formed and they have this really great mission, but then over time, so many nonprofits, you just kind of change and evolve with the times. And you may be doing something different today than you were when you first started. And so it's okay, but there may be some reporting requirements to the IRS as well for that. Just something to keep in mind. If you're doing something different than you did when you were formed and you haven't reported that to the IRS, you may want to look at it. And then the IRS every year issues a priority guidance plan. And so I just listed some of the bullets included for the 2019-2020 year. I think most of those got sidelined because of COVID and everybody kind of reacting crazily to that. But really something good to look at for all nonprofits every year, just to see like, what does the IRS care about this year, and make sure you're doing that well. So I've got, again, my name and email on here. It doesn't look like we have any other questions at the moment. And again, I just really appreciate the opportunity to be able to come and present on this topic. If you have a question that comes up that wasn't addressed in this presentation, please let me know. And if you have ideas for other presentations for this, I also do, some 990 basics or nonprofit basics. So there were a lot of questions around, what the filing requirements are depending on the size of the nonprofit and things like that. So if there are any questions regarding those issues, I'm happy to answer them offline as well, or be a resource as needed. So really appreciate the opportunity to talk with you guys, and hopefully next year this will be in person and can have it be a little bit more interactive. So with that, I will hand it over to Cherokee and Vince to wrap us up.
All right. Thank you, Stephanie. And thank you, everybody, for your participation in this. This is new to us. This is new to all of us. And we thank you for hanging in there with us. And with that, we will adjourn, and we will get ready for the next workshop. We got one more workshop, and we are almost done for the day. So please feel free to log in and check out what workshops that we have on the leadership track, the culture and history track. And with that, we're just going to go ahead and adjourn. Thank you, Stephanie, once again.
Yeah, thanks.